Joining us now, Databricks CEO Ali Ghodsi. Ali, great to have you this morning. As I mentioned, you raised a huge amount of cash this year, over $2 billion. How did you decide that this was the best use for it? And did your investors know that this is what you were going to put it to use to?
Yeah, great questions, and thanks for having me. Well, what happened is that basically startup founders kept coming on to us and knocking on our door and saying, do you guys do investments? Do you want to invest in our Series A, in our Series B? And more pitches that they were doing to other VCs include this architecture of ours, which is called the Lake House, and they wanted to be part of that. So frankly speaking, we were kind of dragged there by, startups who wanted us to invest in them.
Right, but your investors like Andreessen Horowitz and Microsoft and some of the others that do their own investments in the space and early investments, were they on board? Did they know that you were going to use some of the money raised from them for this purpose?
Definitely. They came to us also and said, we are hearing a lot of pitches about Databricks Lakehouse architecture. This thing is on fire. Do you also want to co-invest in these companies? Yeah, they didn't see any conflict of interest. So they also sort of introduced us to many of these founders. So it makes sense to us. We were one of these, kids who were starting their own company, and we know the struggles, and especially if you're building it on open source, how do you make that company succeed? So we want to help them build their companies with investment, teaching them how we did things. So that's kind of how it started. And yeah, the VCs were all on board.
Ali, is this a kind of an anomaly for this time that we're in, or is this a new key component, you think, in ecosystem, both creation and maintenance? Companies that are using your technology that perhaps might be a part of a platform that you're running, that you invest in them at this relatively early stage?
Yeah, I think you're going to see more and more of this. I think what's going to happen in the future is that every software company you've seen in the past is going to re-platform into the cloud, and they're going to have AI capabilities that are super, super intelligent, right? So it then makes sense for the future platforms of the world. We think Databricks is one of them. There might be others, that those kind of companies want to invest in the ecosystem on top. So I think you're going to see more and more of this. And there's so much money flowing in to startups in this data AI ecosystem. Yeah. So it's just natural that, what do you want to do with that money? Investment makes a lot of sense.
There is so much money still in the private markets. In the public markets, though, we have seen a number of these companies in AI and analytics come public over the last year or so. You've got Snowflake, UiPath, C3AI, Palantir, but it's been a bit of a roller coaster. I mean, we talked about this earlier, and we can show a chart how much they're off their peaks. Does that inform your investments, how much you value the companies, the startups in this space, and what you kind of expect going forward? How long until what happens in the public markets is affecting the private markets?
Yeah, look, what's happening in the public markets makes sense, right? It's, inflation is going up, people are scared about the interest rates, so adjustments in high beta stocks make sense. But for Databricks, we're playing the long game. Something changed in the world with the pandemic. People now think maybe it's possible that I'll be on Zoom all day. Maybe I'll do my medicine online. Maybe I'll buy everything online, and maybe AI will be everywhere, right? So maybe AI will eat all of software. So in the long run, I think there are heavy tailwinds. And this is a secular trend. And by the way, in the private markets, we're not seeing those crunches. There's still a lot of money flowing into private investments. So it makes sense for us to invest in those companies because many of them today might be small, but in the future, they might be, the next Workday, Salesforce, NetSuite, whatever, the SaaS applications of the future. And they're going to all have AI capabilities built in the cloud.
So you don't expect money in private markets, or valuations rather, to cool, even though what we're seeing is sort of a valuation re-rating in public markets. I also wonder, Ali, how does that make you think about becoming a public company eventually? We talked about the volatility. You say you're focused on the long-term game. Is it easier to remain private and focus on that long-term game without the scrutiny of public markets?
Look, we are going to go public. I get this question every day. We will be public, and it will be in not too distant future. But the key thing here to remember for us, right, as markets adjust and go up, is when you're basically more or less doubling your business every year, it doesn't really matter. If everything crunches and compresses 50%, we'll grow through that. So in some sense, it doesn't matter that much. And it's nice to be private so that we don't need to worry so much about, what the stock market did, on a day-to-day basis.